In this video, we will talk about the most three important phases of BMNR stock. If you don't know in which phase we are, when to buy, when to sell, we will discuss in which phase we are and how important this is for the next couple of months.
Welcome to the game, I'm the wolf of Dubai.
If you don't know me, my name is Danny and I'm looking for X10 stocks. I was early on Tesla, Palantir, Nvidia, and I think I was early also on BitMine, because since we talk about this stock on this channel, the stock went up 100%. I still believe we're early, and because viewers watched my stock tips, they bought apartments like this girl or houses like this guy in the US, and the next house is on me. So let's dive in. Make sure to smash the like button, because for every 100 likes, I will buy 50 more shares of BitMine. Okay, so we are going and loading this kind of stock. And today we are talking about the three phases. I believe every stock is going through this kind of phases because the market never goes straight up or straight down. There is a beginning phase, there's a mid phase, and there's an end phase. And all those three phases repeat in cycles, and you should know when those cycles are and what kind of parameters you can watch for. Okay, so first of all, I want to also emphasize on this channel, we will never advertise any third-party product. I'm only advertising our own products that we create for you. So if you want that we build your portfolio from the beginning till the end, and we tell you exactly which stock to buy and how much to buy, and you have $10,000 to start with, then X10 stocks is the best choice for you. The link is in the description, and in this video I will only tell you that we was early on BitMine, and there's already another stock that I will share with my members on x10stocks.com that we will buy, and I think that can be also a X10 stock like it was with all the others winners. Okay, but let's dive into phase one. I call it personally the honeymoon phase. Okay, and I want to start with a clip of Tom Lee, how everything started.
Joining us right now is Fundstrat's Tom Lee. He's also a CNBC contributor. And this morning, he's got some news. Bitcoin miner BitMine Immersion Technologies announcing that Tom will become its chairman. Tom, welcome, first of all. And this is some big news. It's kind of complicated, but probably suffice to say that you all are doing basically what MicroStrategy did with Ether. You're going to make Ether, the purchases that you buy through this, you're going to set this whole thing up like this. You want to explain a little bit?
Yeah, glad to. You know, I'm still a big fan of Bitcoin because I think it is, digital gold. But what we've seen in the last, really in 2025 is the financial services industry and crypto are converging. And it really started with stablecoins, which is the ChatGPT of crypto, right? Because it's viral adoption by consumers, businesses, banks, and now even Visa. Underneath the stablecoin industry is Ethereum. That is really like the backbone and architecture of stablecoins. So it's important to create a project that essentially accumulates Ethereum to essentially protect and have some influence on the network. So that's why we're creating this treasury vehicle to buy Ethereum. The more Ethereum that's accumulated, the more secure the network is. And I think it's also sort of the architecture that future banks will have. When Goldman issues a stablecoin and JP Morgan doing it on Ethereum, as a layer one blockchain, they're going to want to secure it by staking Ethereum. So we're trying to get in front of that by creating a treasury vehicle.
And just so I understand, it's safer if you own more of it. Explain why that would be.
Well, Ethereum is a proof of stake network.
Right.
So unlike Bitcoin, which is proof of work and miners do all the work for you, and that's why you have decentralized trust. In Ethereum, it's important for these entities to essentially validate transactions. So by becoming a staking entity, you're sort of securing the fidelity of stablecoins. So you don't want a stablecoin like USDC or USDT to be on a blockchain that's outside the purview of the US. And so I think Ethereum is a high quality, the second largest blockchain network, and it's over 51% of stablecoins, and 30% of all fees on Ethereum are actually stablecoin revenue.
So we even have the Treasury Secretary, Scott Bessent, talking about how stablecoins could be very positive. He likes them, likes to see what's there. But you're basically saying with this, and we've also seen what happened with Circle, the stablecoin issuer,
Yes.
huge run up after their IPO. So you're basically saying that this is the new Bitcoin, you're getting in at a very early stage?
Correct. That's right. Because let's say stablecoins, which is 250 billion today, gets to Treasury Secretary Bessent's reasonable 2 trillion. That's a 10 times increase in size. By the way, already stablecoins are the 12th largest holder of treasuries. They'll become the number 1 holder by then. US dollar dominance is 27% in GDP terms. It's 57% of central bank reserves. It's 80% of financial trading transactions. It's 100% of stablecoin denomination. So by getting to 2 trillion, you're ensuring dollar dominance. This is very good for the US, but 2 trillion of stablecoins is a lot of network fees for Ethereum.
So BitMine Immersion, what you're doing is a $250 million private placement, which is all going to be put into
Yes.
Ether?
That's right. We created a carefully curated list of investors to bet on this. If you look at the press release, it is the blue chip, both in the financial world and in the crypto world. We have
Founders Fund, Kraken, Galaxy Digital.
Pantera. Yeah, so these are in the crypto world, and these are like sort of the blue chip crypto entities. And of course, Founders Fund is legendary in the traditional financial world.
That was the very beginning where BitMine actually turned from a Bitcoin mining company into the world's biggest Ethereum treasury company, okay? Tom Lee and the biggest investors out there like Peter Thiel, Katie Woods, Bill Miller, all of those billionaire investors trusted Tom Lee's vision to create the biggest Ethereum treasury in the world. They believe that Ethereum is crazy undervalued, and they believe that Ethereum can be bought through one of these tools is obviously dilution, where they issue more shares to get some. Another way is like a pipe investment, so more private placement into the company, so there's no dilution and they can still buy more Ethereum, and many, many more tools that Tom Lee obviously says it's not available for speaking about it in public because it's kind of a trade secret, okay? So the first kind of weeks when this kind of announcement comes, I call personally the honeymoon phase. The honeymoon phase is when, the media catches up on that and, everybody starts to speak about the stock and the stock goes crazy and, everybody is losing their minds. It's something new. It's a trend. Crypto is booming again, all-time highs. Everything is like beautiful. Okay, and let's dive into the stock. What actually happened so far in the honeymoon phase. So in the honeymoon phase, actually the stock went from $4.40, which was just prior to the announcement that they will become an Ethereum treasury company, to 100 and I think 150, 160 was the biggest one. Let's see, to a 52-week high was actually 161, okay? So you can see that was 3,000%, okay? 3,000% is insane. 3,000% is something that stocks make over decades and decades and decades. So this kind of honeymoon phase, I believe, is still going on. Okay, so you had like the first pump, news outlets, everybody was talking about it. Then they said they will, issue more and more shares to buy Ethereum. That was the big drop of about 70%. Then we had like a consolidation for a bit of a month or so. And then, we had the honeymoon phase taking off again. It doesn't mean the honeymoon phase is like just like a straight line up. It can be like waves, right? And I believe personally that the honeymoon phase can bring us to 100, 120, 150, 160, maybe $200, okay? So that will be the first push. Or maybe now the honeymoon phase ends, okay? The market goes always in cycles. I will show you another example of Tesla, when I invested in Tesla and how the stock went through different phases. So here's actually what you can see. The honeymoon phase for Tesla started in like 2020, okay? I was buying already 2019, because I'm always early and I'm always looking for those extend stocks. And when you check, we had a similar run, also 2,000% in the honeymoon phase, okay? Then we had like a kind of downwards, then we had like all-time highs again, so you see that this is usually the honeymoon phase, what I call. You can also go to other stocks. Let's go to Nvidia, and you will see Nvidia had also kind of the honeymoon phase, okay, where it went out 1,000% up, okay? So the question is, how long is it? Nobody can tell you how long the honeymoon phase is. It's not only dependent on the company, but it's also dependent on the market. It's about, what's going on in the market, economical data. Do the rates go down? Do we have anything like the tariffs, right? Anything wars going on? So this is the question that is obviously very, very important as well if you look into the honeymoon phase. But for now, I believe we are kind of good. We are now going into the most worst seasonality of the stock market. If you go into the seasonality, you see that, for example, end of year is always, you see the Santa Claus rally, everything going to the peak. People are staying at home, trading more stocks, right? So end of year is always, usually a very bullish scenario. But just before that, September, October can be quite critical. It can be so critical that those months usually are the worst performing. The 2008 crash was in October, okay? Many other crashes started also around the time. The month is always usually not so good in October. So make sure to watch that, okay? I'm not saying that this will be the ignition to the next phase, which I call the crash phase, but it could be the most important phase that we will ever go to, and where you can buy. You can sell your house and your wife in it and buy more BitMine. That's obviously never financial advice, guys, because I believe that BitMine can be an absolute life changer, right? So you can actually sell it with the wife inside. So if you obviously have a husband, do that. So let's dive into the second phase, which is the crash phase.
Just a note on those circuit breakers, just want to point out here that the NASDAQ does use the same circuit breaker as the NYSE in case there was any question regarding that. NASDAQ, as we said, fully open, down 6%. That is a loss of 100 points. So let me also point out that the Friars Club did the open this morning. I don't know if it's a good morning for a laugh or not. Perhaps we all going to need one after the day today. But let's take a look at the big cap technology stocks here. Microsoft certainly set up for a down day after that disappointing outlook, talking about a slow economy and the impact there, slow spending, PC unit growth slower than expected, et cetera, et cetera. You get the picture there. eBay is down 6.5%. And really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure. Yahoo down 8.5%. Cisco 6.5%. Research in Motion 10%. I'd like to go through these in case some of you are actually listening on the radio right now, so you get a feel of really where the kind of selling we're hearing about now. Google 7%. Intel is weak. I've been looking at the Philadelphia Semiconductor Index for weeks now because it's dictated the trading here. We're down 6.5% on the stocks right now. Let's go down to the NYMEX.
Oil down more than $4. Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day, but it wasn't enough to stem the slide. The slide is due today to what we're seeing in the global equities markets, and that's what these traders are focused on. They're looking at the slide in stocks around the globe, and oil is falling as well. But I must note that since the Dow has opened, we are not on the lows of the session. Oil had actually fallen below $63 a barrel. We are off of those lows, but still down $4.40 here at the NYMEX. A lot of folks in the developed countries are saying that OPEC cut should never have happened. The International Energy Agency is saying that it's going to do more harm than good to the world economies. Rick Santelli, over to you in Chicago.
Well, thank you, Sharon. A lot of traders down here are actually amazed and impressed that the markets didn't do actually worse. The spiders were fairly accurate in where they priced pre-opening. If you look at what the lows in the S&Ps are, which right now we're still 10 points above, but everything's happening fast. Interest rates right on the opening at the lowest prices for equities actually saw their yields move up a bit and their price move down, which also makes sense because many people this morning, due to the uncertainty of equities, the wide bid-offer spreads, the lack of big places to trade with big volume, well, they hunkered down in there. Now some of those buys are moving and doing what they need to do in equities, pulling those out. But let's be clear, things like a 30-year bond, which had some very strange anomalies yesterday in the 30-year swaps, was a prescient indicator. 30-year yields, for many reasons, are now at the lowest level, or were at the lowest level they've ever been at. Mark Haynes, back to you.
And the second phase that maybe is my most beloved one is the crash phase, okay? The crash phase is actually when the enthusiasmus, the euphoria about the stock or a new project or a new product that the company launches is going down. And if we're looking to the market today, as of this Friday, as I'm recording this, you can see the market is not doing well so far and is pretty much selling off, which is totally normal after the PPI numbers. And, we had a great rally and so on. But looking into BMNR, being down about like 8-10%. This is not the crash, guys, okay? This is not the crash phase. We didn't had a crash phase yet on BMNR. However, this is my favorite phase because if you're looking into, for example, Tesla, you will see that this crash phase over the last, let's say, 5 years was actually after, the November of 2021. And the crash phase doesn't have to do anything with the company itself, but can do with the overall market. This is when the bear market started in 2021. And from there, you can see that the Tesla shares went down 70%, okay? Not 50, 70%. This phase, which only lasted for about 1.5 months, was a great opportunity to buy even more, okay? Don't try to time the market, just buy more if you're convinced that this is an X10 stock. If you want to find them for you and build your portfolio, if you have $10,000 or more, check out x10stocks.com, my brand new product where we build your portfolio in your broker. Check it out. We have a huge offer to join us today and make sure to be part of my group where we tell you the next X10 stock after BitMine as well. But what happens after this crash phase? Usually the stock gets so cheap. I think in this case was like $100 for Tesla. $113 in January of 2023. And usually after a very short time of this crash phase, you have a much longer third phase that we will talk in a second, okay? But this crash phases, as you can see, are much shorter in time. This was just 1.5 months. And then we had a 300% ride, okay? And this is the last phase that we will talk about. But the most important part in this crash phases is actually to keep a very cool head. Think about why you went into the stock in the first place. Was it the founder or the chairman? In this case, like BMNR, Tom Lee. Do you like them? Do you like the team? Do you like the product? Do you like the vision? Do you like the speed? Do you like the delivery, the execution? And if this all is totally right, then it's just the most important part where you load up much more shares, okay? Don't wait for it because it can be that the honeymoon phase will go until next year and then we will have a crash phase, but make sure that you be mentally prepared to just buy more, okay? So don't try to time the first phase and the second phase because it's impossible, okay? Nobody can do it, otherwise there would be only billionaires in this world. So make sure to be ready for the most important phase, which is my most favorite phase after the crash phase, is actually the wife changer phase, okay? This is the phase where everything comes to fruition, where you can make the most money out of the stock, where you are, very much rewarded for the days you went through hell because of the crash phase. In the crash phase, you will be absolutely mentally broken down. You will be hit in the head while you're living and staying on the floor and everybody will still kick you. This is how the crash phase feels like. But remember, it's never forever. It's about the company that continues, and you can see it in this picture here. The company continues to deliver and the stock price go down. And so you see this huge we buy more phase, we buy here phase, okay? And this is very important for long-term investors, but also for people that would love to buy and sell more shares. You buy when you find a company, you make sure that you accumulate, you make sure that you're not too excited, not too greedy in the honeymoon phase, because the crash phase will always be there for every single stock. Not one stock in the lifetime of the stock market went up forever. Okay, this is just physics. We have gravity in the stock market. What comes up must come down as well. And this will happen. And if you want it or not, this will be the rules of every investment, that you're coming into a roller coaster. And depending on the phase that you get into the stock, some people are lucky. They are just in the beginning of the honeymoon phase and they see a huge increase. And some people are even more lucky and actually sell at the top of the phase one. And some people then are getting even more luckier to get in the bottom of the crash phase and then ride it up to the consolidation phase, to the winner phase. This is the most important phase. If you make it through all the three phases, I can guarantee you that you will have a totally different life. Obviously, this is never financial advice. It's for educational purpose. Make your own research to make investment decisions. But I want to teach you from years and years of experience. I bought my very first stock when I was like 13 years old. So, I'm doing this for over 20 years. And I have seen cycles, I have seen crashes, I have seen, market consolidation phases. I have seen stock that should be triple the value, but selling off because of the market or the industry. And then you will see that the most important phase, the winner phase, is the one where you will make the most. And let's dive into the winner phase. So the winner phase is, kind of the phoenix of the ashes phase, because everything goes to, very low numbers. I remember when Tesla was at around like $100, I was thinking, man, this is so cheap. And what happened then, just in a matter of a blink, okay, in 6 months, it went 150% up. And in just a year, it went up 285%. Now you bought into the accumulation phase, you went through the honeymoon phase, then you had the crash phase, and then you had the absolute winner. And imagine you was holding through that, and you would accumulate more and more in the crash phase. You would make life-changing, unbelievable, crazy amount of profits. And this is how you navigate every single investment. This is how you navigate the BitMine investment. This is how I do it. I just bought today more shares in a small downturn of the market because it's up and downs. Maybe BitMine will be up 25% tomorrow or day after tomorrow. We don't know, okay? We just know that we pick very, very high quality companies in the matter of those different phases. I hope that video helped you to navigate, and make sure to leave a comment in the section below. And I would love to, show you one more clip where maybe it's the most important clip. It comes from someone that I value very much. And after the video, after the small clip, the video ends. I hope you subscribe. And remember, the grass is greener on the other side.
Well, I won't comment on the three companies that you've named, but in general terms, unless you find the prices of a great company really offensive, if you feel you've identified it, and by definition, a great company is one that's going to remain great for 30 years. If it's going to be a great company for 3 years, it ain't a great company. I mean, so you really want to go along with the idea of something that if you were going to take a trip for 20 years, you wouldn't feel bad leaving the money in with no orders with your broker and no power of attorney or anything, and you just go on the trip and you come back and it's going to be a terribly strong company. I think it's better just to own them. I mean, we could attempt to buy and sell some of the things that we own that we think are fine businesses, but they're too hard to find. I mean, we found See's Candy in 1972, where we find here and there we get the opportunity to do something, but they're too hard to find. So to sit there and hope that you buy them in the throes of some panic, that you'd sort of take the attitude of a mortician, waiting for a flu epidemic or something. I mean, I'm not sure I'm not sure will be a great technique. I mean, it may be great if you inherit. Paul Getty inherited the money at the bottom in 32. I mean, he didn't inherit it exactly. He talked his mother out of it, but it's true, actually.
Close enough.
Yeah, close enough, right? But he benefited enormously by having access to a lot of cash in the early 30s that he didn't have access to in the late 20s, and so you get some accidents like that. But that's that's a lot to count on. And if you start with the Dow at X and you think it's too high, when it goes to 90% of X, do you buy? Well, if it does and it goes to 50% of X, it gets you never get the benefit of those extremes anyway, unless you just come into some accidental sum of money at some time. So I think the main thing to do is find wonderful businesses. Is Phil Carre here? We got the world. Yeah, there's the hero of investing. Phil, would you stand up? Phil is 99. He wrote a book on investing in 1924. Phil has done awfully well by finding businesses he likes and sticking with them and not worrying too much about what they do day to day. There's going to be I think there's going to be an article in the Wall Street Journal about Phil on May 28th, and I advise you all to read it. And you'll probably learn a lot more with him by coming to this meeting. But it's that approach of buying businesses. I mean, let's just say there was no stock market, and the owner of the best business in whatever your hometown is came to you and said, "Look, my brother just died, and he owned 20% of the business, and I want somebody to go in with me to buy that 20%. And the price looks a little high, maybe, but this is what I think I can get for it. Do you want to buy in?" I think if you like the business and you like the person who's coming to you and the price sounds reasonable and you really know the business, I think probably the thing to do is to take it and don't worry about how it's quoted. And it won't be quoted tomorrow or next week or next month. I think people's investment would be more intelligent if stocks were quoted about once a year, but it isn't going to happen that way. So, and if you happen to come into some added money at some time when something dramatic has happened, I mean, we did well back in 1964 because American Express ran into a crook. We did well in 1976 because Geico's managers and auditors didn't know what the loss reserve should have been the previous couple of years. So we've had our share of flu epidemics, but you don't want to spend your life waiting around for them.